And that name is a name that has been in the news for all the wrong reasons lately, including more stories this morning around their mishandling of disinfo, misinfo, and that is Facebook. You don't sound concerned about all this. Why not?
Well, we're not fans of management, and we do have some concerns about tonight's print in terms of their earnings. However, the stock is off from $385 down about $60+. We think that it's a very powerful franchise. They're going to be forced to be a better corporate citizen, but they're going kicking and screaming. But it's a powerful franchise. People love to use the service, and it's one of the cheapest FANG stocks. So if you can hold your nose, we think it's going to be very good over the next 6 to 12 months. If you were buying, we'd buy about half today before the print, and we'd buy the balance of your position tomorrow or next week, or this week, if the stock sells off anymore.
Yeah, we talked earlier in the program about supply chain issues and technology and how some companies, maybe Facebook's immune to it, they don't really make anything. But a company like a Cisco does. They need to buy semiconductors. They need to buy copper. They need to buy things that actually build parts in some respects. But again, Cisco, a name you like, despite some of the headlines kind of seeming, David, to go against it.
Well, Cisco does have supply chain issues, and they do have inflation or cost issues in their products. However, they're fully known, and we think that the company is addressing them. They really have great purchasing power. They're one of the larger technology companies out there, and they've got very strong demand, which is the first time we're able to say that in some time. And the important thing about Cisco is they're selling at about 16.5 times earnings, so you're getting it very inexpensive. They're going to get through the supply chain issues, and you're getting a great franchise at a very reasonable price. The other thing is they're really a hybrid play in terms of work at home, work in the office, so there's going to be a lot more of upgrade of networks. Cisco's a direct beneficiary of that, and they've got WebEx.
I remember the first stock I ever bought. We can't own stocks now, but before I did this gig, I bought a stock in part because they built a new headquarters near where I lived, and I was like, well, they must be doing pretty well. Next door to CNBC, by the way, don't take that as investing advice on companies, but David, next door to our headquarters at CNBC is the U.S. headquarters of Unilever. And a few years ago, they built this big, shiny new building. Thank you. It makes the neighborhood look a little bit nicer. And I thought Unilever and Ragu and all their brands must be doing pretty well. We know food cost inflation is a big story, but UL, based in the Netherlands, but our next door neighbor here in the United States, is another name that you like, just a little different than technology.
Yeah, so we're a little bit wary about buying companies in front of earnings this earnings season because we think the earnings season is going to be lighter than last quarter. Unilever just reported, and the stock had been off from 60 to the low 50s, and they had a better than expected quarter. They did say that they're covering those higher costs, but they're raising prices. So they upped their guidance, so they have more confidence in their guidance. So we think from here, the stock easily has 10 to 15% upside, and you're getting a 3.8% yield while you're waiting. Good long-term franchise, one of the cheaper consumer product companies.